The Nightly Business Report.
Amid tariff challenges, the IMF urges Sri Lanka to focus on expanding export markets and fostering an investment-friendly environment for stability and growth. Transshipment volumes at the port of Colombo dropped in the first quarter due to local operational factors and challenges in global shipping dynamics. With the oil share price index rising 126 points and finishing at 15,742, representing an increase of 0.81%, the Colombo Stock Exchange saw positive action today. And as investors analyze the jumble of company earnings and awaited indications of movement in the US-China tariff standoff, US equities ended the day higher. Good evening and thank you for joining us. The International Monetary Fund has urged Sri Lanka to prioritize diversifying its export markets and fostering an investment-friendly environment to ensure continued stability and growth amid challenges posed by recent tariff changes. IMF's Srinivasan highlighted the challenges Sri Lanka faces due to recent tariff changes, noting that uncertainty has made it difficult to create an effective microeconomic framework. He explained that the IMF team was in Sri Lanka during the tariff announcements, making it challenging to assess the impact on growth and exports. Srinivasan emphasized that tariffs have a particularly severe effect on Sri Lanka's key sectors, especially the garment industry. He stressed the importance of diversifying export markets and greater regional integration to mitigate risks from tariff impacts. On investment, he called for creating an environment conducive to domestic investment while maintaining fiscal discipline. Srinivasan acknowledged the progress made under the current IMF program, which has brought macroeconomic stability and low inflation. He concluded that Sri Lanka is now at a critical juncture for implementing structural reforms that will foster sustainable growth and private investment. Sri Lanka and the United States are set to continue discussions aimed at finalizing a bilateral trade agreement following a recent meeting between Sri Lankan officials and US Trade Representative Jamieson Greer. The two sides agreed to focus on reducing the trade deficit and addressing both tariff and non-tariff barriers. Sri Lanka expressed its commitment to working with the US to overcome economic challenges and promote full recovery. Ambassador Greer welcomed Sri Lanka's proposals and expressed optimism about reaching an agreement soon. Both sides emphasized the importance of finalizing the deal in the shortest possible time. The talks reflect a continued effort by the US Trade Representative's office to ensure fair and equitable trade relations between the two countries. Transshipment volumes at the port of Colombo dropped in the first quarter of the year, showing a decline compared to the same period last year.
Transshipment volumes at the port of Colombo fell by 6.3% year-on-year in the first quarter of 2025, totaling to 1.3 million TEUs, down from 1.64 million TEUs in the first quarter of last year. The decline contrasts with the growth the port experienced in 2024, fueled by diversions from disruptions in the Red Sea. Mainline shipping lines pulled some services out of Colombo earlier this year due to heavy congestion, and these services have yet to return. In March, however, transshipment volumes saw a smaller year-on-year drop to 3.3% compared to a steeper decline in February. Overall, the port handled 1.94 million TEUs in the first quarter of this year, a 3.6% year-on-year decrease. Terminal performance varied, with JCT, UCT and ECT showing a 5% year-on-year decline, while SAGT saw a 9.2% increase. Analysts attribute some of the uncertainty in volumes to the ongoing US-China trade war and its impact on shipping.
The Insurance Regulatory Commission of Sri Lanka has introduced the optional compensation scheme to provide compensation for third-party victims of motor vehicle accidents, specifically for death or permanent disability. This scheme, launched in collaboration with the Ministry of Transport and Highways, covers pedestrians and cyclists injured in accidents occurring on after March 1, 2024. Compensation will be provided by the insurance company or the motor vehicle involved, provided it holds holds a third-party motor vehicle insurance policy. The compensation amount is set at 500,000 rupees for death or permanent disability, with claims intending to be filed within 6 months of the incident. However, drivers, passengers and individuals involved in intentional collisions are excluded from eligibility. Victims may also seek further compensation through the legal system if they believe the amount under the scheme is insufficient. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange saw a positive movement today, with the all-share price index gaining 126 points, closing at 15,742, reflecting an increase of 0.81%. Similarly, the S&P SL20 index rose by 28 points, settling at 4,633, a 0.60% gain. The market recorded a total share volume of 125 million and a turnover of 2.4 billion rupees. For further insights, we speak with Shahana Kanagaratnam from First Capital Holdings.
Thank you, Prashansa. The Colombo stock market extended the positive momentum witnessed yesterday, ending the day in the green. The all-share price index closed the day at 15,742, gaining 126 points, marking a 0.81% increase from the previous day. The S&P SL20 index also rose by 39 points, reaching 4,644 today. The most significant positive contributors to the ASPI were LOLC Holdings, Royal Ceramics Lanka, National Development Bank, Sunshine Holdings and Melsta Corp. Positive sentiment was noted among all market participants, including high net worth and retail investors. The turnover stood at Rupees 2.4 billion, marking a 1.4% decrease from the monthly average of Rupees 2.5 billion. The capital goods sector led today's turnover with a 31% share, followed by the food, beverage and tobacco sector at 26% and the diversified financial sector at 11%. TES Agro non-voting, Agrapatna Plantations and Sigiriya Village Hotels emerged as top gainers, whilst Nation Lanka Finance, TES Agro Voting and Equity 2 emerged as top losers for the day. Thank you.
The market started the week on a negative note, with the ASPI showing gains while the S&P SL20 continued its downward momentum during the first 2 days. However, by middle of the week, market performance became mixed. The final 2 days saw positive movement with gains recorded across various indices. Ending the week on a more optimistic note. For further insights, we speak with Ranjan Ranatunga from First Capital Holdings.
Thank you, Prashansa. After weeks of slumber affected by multiple factors from reciprocal tariff to raging trade wars between US and China, as well as escalation geopolitical tensions, the Colombo bourse bounced back during today's week with the ASPI or the all-share price index gaining by 0.8% on a week-over-week basis, while the S&P SL20 also gained up by 0.4% on a week-over-week basis. Several reasons positively affected the current market sentiment. We are near finalization of the staff level agreement for the fourth review, positive updates from the authorities on the reciprocal tariff discussions with the US, and attractive share prices after a 10% correction in the index offered incentives for investors. Market turnover also improved compared to previous week, where the average turnover increased to 1.4 billion rupees from 870 million recorded during the previous week. Moreover, the pickup in interest from both retail as well as high net worth also visible during the week, with total trades recorded for the week ticking up compared to last week. Meanwhile, capital goods sector, the banking sector, the diverse sector financials, as well as the food and beverage sectors stood out as the top sectors in focus during the week.
Gold prices slipped in Asian trade today as improving risk sentiment weighed on safe haven demand. Spot gold fell 0.9% to $3,318.28 per ounce, while June gold futures dropped 0.6% to $3,328.67. Hopes of a potential de-escalation in US-China trade tensions sparked investor appetite for risk assets. Bloomberg reported that China may exempt certain US goods from steep tariff, signaling a possible softening in the ongoing trade conflict. Rebound in the US dollar from 3-year lows also added pressure on metal prices. Despite the decline, gold remained close to its record high of $3,500 reached earlier this week. President Trump's comments on ongoing talks, though denied by Beijing, further lifted market optimism. As risk appetite rises, investors are shifting focus from safe havens to equities and other growth-linked assets. Oil prices edged higher in Asian trade today but remained on track for weekly losses. Brent crude rose 0.3% to $66.77 per barrel, while WTI crude gained 0.4% to $62.38. Despite the slight rebound, both benchmarks were set to fall nearly 2% this week. The decline follows a broader drop of over 10% in April as supply concerns and weak demand weighed on the market. Expectations of increased OPEC Plus output and uncertainty around US-China tariff talks have pressured sentiment. However, hopes of potential tariff relief by the US offered some support to prices. Analysts warn that rising inventories and slowing global growth could keep oil under pressure. Markets now await further clarity from upcoming OPEC Plus meetings and trade negotiations. The Sri Lankan rupee has further depreciated against the US dollar today, continuing its downward trend. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have increased. In addition to the US dollar, the rupee has also weakened against a range of foreign currencies, including those from the Gulf region. Let's take a closer look at how the rupee is faring against major global currencies in the current trading environment. A short break now. This is the Nightly Business Report. Welcome back. Shangun Automobile, China's top EV maker, has partnered with Shenok to bring its premium electric vehicle brand Deepal to Sri Lanka. The first batch is set to arrive by May 2025, with pre-orders already underway.
Shanghai has partnered with Senok to launch its premium electric vehicle brand Deepal in Sri Lanka. The brand introduced in 2023 reflects year of developments under Shanghai's new energy division, offering models designed for modern drivers. The initial lineup includes 5 models: SO7, LO7, EO7 and SO5, and the price compact Lumin ranging in price from 6.9 million rupees to 30 million rupees. Deepal has already found its success in markets like Thailand and Nepal, where it became the top-selling electric vehicle brand. Senok, with its robust after-sales network and skilled technicians, is ready to support the brand's entry. The company is also planning to roll out a nationwide charging network to ensure seamless ownership. This launch marks a significant step in Sri Lanka's transition to sustainable, performance-driven electric mobility. Shanghai's commitment to innovation and sustainability is reflected in Deepal's intelligence features and eco-friendly performance. With the growing demand for electric vehicles in the country, this partnership positions Deepal as a strong contender in the local market.
Kelsey has achieved ISO 27001-2013 certification, validating its strong commitment to information security. The certification process involved a thorough audit of the company's practices across its operations in Singapore, Sri Lanka and the United States. CEO Mangala Karunaratne emphasized that the certification reflects Kelsey's dedication to upholding the highest information security standards for its global clients. This achievement positions Kelsey as a trusted technology partner for businesses in the USA, Europe, and Nordic region. The certification ensures that Kelsey meets rigorous international standards for managing and protecting client data. This milestone benefits Kelsey's diverse clientele, which includes both startups and established enterprises across various industries. Fitzair, Sri Lanka's first privately owned international airline and a leading low-cost carrier, has officially launched business class across its regional network, effective today.
Fitzair has introduced business class on its regional network, marking a significant milestone in its growth. The new offering combines premium features with Fitzair's core commitment to affordability and reliability. Business class passengers will enjoy benefits such as priority check-in, fast-track boarding, and the expedited baggage handling. The service also includes flexible rebooking options, 40 kg check-in luggage allowance, and a 10 kg hand luggage. In flight, passengers can access personal entertainment devices with curated content and enjoy complimentary seat selection. Fitzair Executive Director Ammar Qasim emphasized that the launch aims to offer budget-conscious travelers a premium experience at an affordable price. This move is a part of Fitzair's broader strategy to expand its presence across South Asia and the Middle East.
Capital Alliance Holdings Limited has announced its initial public offering opening on May 8, 2025 under the theme Building Wealth Bridging Markets. The IPO aims to expand CAL's vision of democratizing financial growth and connecting capital markets across frontier economies.
Capital Alliance Holdings Limited, with 25 years of experience and over 250 billion rupees in assets under management, has announced its initial public offering set to open on the 8th of May this year. The initial public offering aims to expand CAL's investment banking model into high-potential frontier markets beyond Sri Lanka. The company's theme, Building Wealth Bridging Markets, reflects its vision to connect global investors with growing opportunities in the emerging regions. The IPO will offer 6% of CAL's equity with an issue size of 575 billion rupees and a post-IPO market cap of 7 billion rupees. Funds raised will support CAL's expansion into frontier markets and enhance its digital investment platforms. With a proven track record in Sri Lanka and Bangladesh, CAL aims to apply its successful model to international markets. This IPO represents an opportunity to shape the future of frontier market finance while partnering with CAL on its global journey. The company's innovative approach combines technology and expertise to democratize financial growth across regions. CAL's vision offers investors a chance to be a part of a transformative journey in global markets.
Amana Bank has partnered with MediHelp hospitals to offer exclusive healthcare benefits to its debit card holders. The collaboration includes a 25% discount on various health check packages and MediHelp's network of hospitals. Debit card holders will also receive an additional 5,000 rupees off cataract surgeries and 10,000 rupees off inpatient bills at MediHelp's Horana and Mount Lavinia hospitals, valid until 31st of December 2025. MediHelp hospitals, with over 40 years of experience, operates a network of hospitals, laboratories and collection centers across Sri Lanka. Amana Bank COO Imtiaz Iqbal expressed excitement about providing affordable healthcare options to its customers. MediHelp Hospital's Medical Director Dr. Charith Vijayvardhana emphasized the shared goal of making quality healthcare more accessible to communities across Sri Lanka. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian stock advanced today, led by strong gains in technology shares following upbeat earnings from Alphabet in the US tech-heavy indexes like Hong Kong Hang Seng, South Korea's Kospi and Japan's Nikkei 2025 rose between 0.6% and 1.4%, with Nikkei leading the rally. In contrast, China's Shanghai Shenzhen CSI 300 and Shanghai Composite indexes trade flat to slightly lower. Japanese markets continued their upward momentum on optimism around upcoming US trade talks. Broader sentiment in Asia remained cautious, with some markets weighed down by risk aversion. Singapore's Straits Times index dropped 0.5%, while India's Nifty 50 futures pointed to a muted start. US stocks closed higher, rallying for a third straight day with a solid boost from technology shares as investors parsed a mix of bad corporate earnings and have watched for signs of progress in the US-China tariff standoff.
U.S. stocks rallied for a third straight day on Thursday, with the Dow adding about 1.25%, the S&P 500 gaining 2%, and the Nasdaq climbing 2.75%. Beijing called for cancellation of U.S. tariffs on Chinese goods, following comments from U.S. Treasury Secretary Scott Bessent, signaling the White House could be willing to de-escalate trade tensions that have whipsawed markets for weeks. All of the Magnificent Seven megacap technology stocks rose, getting a boost from software firm ServiceNow's better-than-expected quarterly results, which sent its shares up more than 15%. They included Google parent Alphabet, which closed up more than 2% and climbed in extended trading after it beat first-quarter profit and revenue estimates and said it would buy back $70 billion worth of shares. On the flip side, shares of Intel, up more than 4% at the close, plummeted in extended trading after the company forecast second-quarter revenue below Wall Street estimates, casting a shadow over new CEO Lip-Bu Tan's first round of earnings. Meanwhile, President Trump's shifting tariff policy prompted corporate giants Procter & Gamble, PepsiCo, and American Airlines to cut or withdraw their forecasts due to elevated uncertainty among consumers. P&G and Pepsi closed lower on Thursday.
Nissan Motor sees the largest ever annual loss of $4.91 billion to $5.26 billion as new CEO Ivan Espinosa attempts to turn around Japan's third largest automaker, which is cutting jobs, reducing capacity and closing plants.
Nissan warned of its biggest ever loss on Thursday. The Japanese automaker said it sees a net loss of up to $5.26 billion for the financial year that ended in March. It's far higher than a previous forecast of $560 million. It blamed impairment charges as the struggling automaker restructures. The carmaker booked impairments of more than $3.5 billion in North America, Latin America, Europe and Japan. That's after reviewing production assets with additional restructuring costs to total more than $421 million. It comes as new CEO Ivan Espinosa tries to turn the auto giant around. Nissan is cutting jobs, reducing capacity and closing plants to save money. It also ended merger talks with Honda to build a $60 billion car company in February. Sources said the deal fell apart due to Honda's proposal to make Nissan a subsidiary. Nissan said it sees a full-year operating profit of just under $600 million, around 30% lower than its previous forecast. The automaker is due to report its earnings in mid-May.
That's a wrap-up today's Nightly Business Report. We'll be back after the local government elections with the latest updates in the business globe. Until then, I'm Prashansa Gunawardena. Thank you for joining us and have a good night.